I think what has changed, we've been talking about this reset situation where currencies, global currencies have to reset. And basically, when you have a reset, it basically means a lot of people who've got the fiat exposure suddenly find they can't use it, can't deploy it because there's something different. There's a new type of system. People could have had a lot more just before that currency reset if they hung on to it. So what's happening? It's going to come, but we don't know when. It'll be an unexpected situation. And when you know it's coming, it will be too late to buy any gold or silver or anything.
The sharpest divergence in responses between advanced economies and the global south related to the trend of de-dollarization and the extent to which geopolitical tensions play a role in fueling it. There is a broad, deliberate shift by central banks toward gold reserves, while global trust in fiat, especially the dollar, continues to waver. BRICS members are serious about de-dollarization, but structural and political realities mean the USD remains firmly entrenched for now. When asked how much of total global reserves would still be denominated in dollars 5 years from now, more central banks from non-advanced economies anticipated a slight decrease from the current 43% share than their peers in advanced economies. For comparison, gold accounted for only 19% of total reserves, with 15% allocated in euros and 2% in Chinese renminbi. Among those that expected no change in the share of dollar-denominated reserves, the relationship was flipped. Far more advanced economies believed this to be the case than those elsewhere. As of 2025, the US dollar remains the dominant global reserve currency, accounting for approximately 58 to 60% of the world's foreign exchange reserves. This is down significantly from around 72% in the late 1990s, reflecting a long-term, gradual decline in trust and usage. According to the World Gold Council 2024 and 2025 survey, over 70% of central banks plan to reduce their dollar holdings in favor of assets like gold, yuan, or euro. Financial expert Clive Thompson discusses the current economic landscape and the future of fiat currencies. He believes we're witnessing the slow and steady collapse of the fiat currency system. He warns that once this next reset begins, it will be too late to buy gold or silver. The markets will move too fast, and ordinary people won't have time to react. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
Absolutely, definitely witnessing the slow motion end of the fiat currency system. Now, for the last 2 or 3 years, I've been saying I think we're at 5 minutes to midnight when it comes to the fiat currency system. And people say, well, what are you talking about, Clive? I say, well, maybe 2027, maybe 2025, maybe 2030. But I think we're pretty close to the end. But I had a lot of people would then sort of laugh at me and say, you got it wrong, Clive. It's the thing's going to carry on. They'll just inflate their way out of the problem and everything will be the same. I've noticed a subtle change in what people are saying. They still say I've got it wrong. And they say it's not 5 minutes to midnight now. It's 2 minutes to midnight. I think what has changed, we've been talking about this reset situation where global currencies have to reset. And basically, when you have a reset, it basically means a lot of people who've got the fiat exposure suddenly find they can't use it, can't deploy it because there's something different. There's a new type of system. What they had in cash or money in the bank or bonds isn't what they thought it was. It doesn't buy because they now have to use something different. So, that geopolitical situation, it could be an internal political situation, it could be civil war, it could be a natural disaster. It could be just a panic in the financial markets where the bond prices are plunging and the Federal Reserve and the Bank of England and the Bank of Japan doesn't provide the help they're supposed to. We don't know exactly how it could end, but we might suddenly wake up one day and find the banks are closed, just as happened in February 1933. There was no warning that the banks were going to close then, but of course, once they'd closed and reopened 2 weeks later, people then knew the writing was on the wall. And what followed was a month or two later, they then said, "Okay, everybody, you hand in your gold." And those who handed in their gold then found themselves gypped out of $15 an ounce when a year later, nearly, they raised the price from $20 to $35. So, everyone who handed their gold, it was rather disappointed because if you still illegally held on to your gold, you could have taken it down to a jewelry shop, chucked the gold coin in with the bracelets and things, and probably given you a bit more than $20 that was on the face of it. Obviously it wasn't completely illegal to do that, but the dollar's dominance carries on, but it is a bit like a giant super tanker in the ocean. It's very hard to turn it around. but other nations are building their super tankers in their own way. And that's going to take, it's not going to happen overnight. It's going to take some years. And even when it happens, it still won't change the fact that oil and so forth is going to be quoted in dollars. They might say, oh, we should quote it in renminbi or perhaps the new gold-backed BRICS currency or whatever they decide to bring in. What I think will happen over time is that at some point, and we're a long way from that, new BRICS-backed central bank will be formed. We'll call it the BRICS Central Bank. It might be headquartered in Switzerland, it might be headquartered somewhere else like Singapore, I don't know where. And that BRICS bank will probably hold a certain amount of gold deposited by each BRICS member, and in return, each BRICS member will receive a certain amount of a global BRICS currency. And that BRICS currency will potentially be convertible at the central bank back into gold. But the nations won't trade in gold, they'll trade between themselves in the BRICS currency, and if there's a trade imbalance, then unless it's corrected, potentially the nation which has got the surplus funds will be able to in some way, shape or form, ask for that to be changed in gold if they wish to do so, and things will start to balance out again, just as they did while we were on the gold standard. Trade imbalances were sorted out in a certain way. Either a currency would devalue, but of course, if you've got your currency, if the currency is the BRICS currency, that's not going to be the currency of any one nation.
Central banks around the world expect their gold holdings as a proportion of their reserves to increase over the next 5 years while anticipating a decrease in their dollar reserves, according to a survey by the World Gold Council, WGC. Gold demand from central banks has risen significantly over the past 3 years despite its price rally to consecutive records. It hit an all-time high of $3,500 an ounce in April, up 95% since February 2022, when Russia invaded Ukraine. 73 central banks responded to WGC's survey, carried out between February 25th and May 20th, and 76% of these expect their gold holdings to be higher in 5 years compared with 69% last year. Nearly 3/4 of respondents expected central banks' dollar-denominated reserves to be lower in 5 years compared with 62% last year. However, while central banks are accumulating gold, everyday people aren't paying attention. Clive believes that owning gold is no longer old-fashioned. It's becoming an innovative financial survival tool, especially as debt problems worsen and faith in the current monetary system fades. Now, let's redirect our attention to a video.
Well, I think we've seen record purchases of gold by the central banks in the last 2 years. And I think they're probably, we don't have the numbers yet, it's too early in the year, but I think they're probably accelerating that this year. And we're not talking about the European central banks, we're talking more central banks which, let's say, the super friends of the United States. You know, one central bank which is rumored to have a lot of gold, but says they don't have much, it's only about 5% of the 6% of the reserves, is China, which is a very low percentage officially, but unofficially it might be a lot more. I think all central banks know that if there's some sort of new system forced on us by a failure of the dollar, I think that's the reality. I meet a lot of people, but I also get a lot of communications coming in via LinkedIn about investment matters. Now, I'd say the people who are communicating with me on LinkedIn are mostly fairly smart people, and they are talking about gold, and the questions are like, how much would you hold, or where would you buy it, and that sort of thing. Whereas the people I meet outside of in the street, and I meet a lot of people every day because I take my little boy to school, and I meet the fathers and mothers who are there. For the most part, they don't really know. They don't really care. They couldn't tell you the price of gold. They couldn't tell you the price of silver. They don't have any, and it's not a topic of interest. Of course, the stock market is, because I live in Switzerland, there's almost nobody who doesn't have exposure to the stock market, and everybody's got some shares. It's just the way it is here. But you sort of try and move them over to the gold. They don't know how to buy it. They don't have any. They're not really interested at the moment. So I think that's not yet happened for the public at large. They're still looking at this. I think gold always had a place in portfolios, although for many, many decades, a couple of decades, it was almost zero. But I think it's coming back. I've seen a number of banks write to me and say, we're now moving gold into our preferred asset class, or we think the gold price will be higher. I see forecasts sort of moving towards the $4,000 mark. They're usually quite cautious, usually at any point in time forecasting $100 or $200 above the current price. But there's a few out there who are looking at $4,000 this year as a possibility. Of course, if the gold price does rise, they'll raise their forecast. But the important point is they are now writing about it when they weren't 2 years ago, a year ago. And they're writing about it because they want to encourage their clients to have some gold. And we're talking about exposure of 1 to 5%, as opposed to having 0% gold. I mean, I can think of one very large bank here in Switzerland where if I spoke to the wealth managers who work there, the investment managers, and you said the word gold, they said, you should have 0 in gold. Why should you have 0? Well, pays no interest, it's going nowhere, it's a pet rock. Well, they're changing their tune, and that's officially changing the tune. Now you should have some. And why should you have one? Well, the reason they say is it's an alternative to the fixed income portfolio, or fixed income part of the portfolio, because it's likely to outperform the government bonds, for example, because government bonds are going to face a crisis down the line because the need to borrow is growing faster and faster, and salaries and incomes is not growing fast enough to create that. So we're going to have less people being expected to buy more bonds.
We're living through a time of significant change in the global financial system. Central banks around the world are quietly shifting away from the US dollar and moving toward gold. Most now expect their gold reserves to increase and their dollar holdings to shrink over the next 5 years. This is a strong indication that trust in fiat currencies, especially the US dollar, is waning. Gold prices have hit record highs, yet everyday people still aren't paying attention. While the shift may seem slow, history shows that financial resets often happen suddenly. For those watching closely, the message is clear. We're getting closer to a global currency reset, and holding tangible assets like gold may be one of the most innovative ways to prepare. Are people underestimating the risks ahead? Or is this all overblown fear? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates.